Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and welcome to today's morning call. It is Wednesday, and you're seeing red arrows everywhere. The same red arrows that you've basically seen through the majority of 2016. I think we're in week 3 now, or maybe, actually, what are we, January 20-something? And, the pressure has been pretty relentless. And that's what happens when markets break. Last year you had, in the end of the year, this rounding top where leadership was narrow, where oil was a problem, where most sectors were in bear markets before the overall indices, and then when things break, they break fast. That's why we talk about your moving averages, and we talk about what's your time frame. Do you trade for alpha, or do you have a 401k, a 529, whatever it is? At these points, it all depends where you want to live and what your risk is. And as of now, most sectors are already in bear market territories or well below, and now is not the time to freak out. Hopefully you've been watching the show, you've seen the signals, you reduced risk heading into the first week of the year or even the last week of last year, and whatever. That was then, this is now. What to do now? Okay, if you're trading short term actively, this is what I would do. Okay, you look at the S&P right now, you'll see that here is the support going across. This was the support we pretty much said we need to test at least at some point in the first month or so, considering here's where we broke down from this minor wedge below all the moving averages. We lost this 1990 area, almost similar to what happened before the flash crash, but this was a different setup, and now we are here. Okay, the futures are down 35 handles, so we are opening below this 1857. 1857 is your pivot. We had multiple gap ups into the 8-day that all failed. That was very bearish action, telling you that most likely we should see lower prices. Remember, in a strong environment, you're above the 8-day moving average and you follow it and you could buy the dip and play a rally, etc. Well, now this is the exact opposite. We've been below. So this is where we're coming into right now. But the question is, does it come back up and reclaim it, or are we just breaking, this key level that could give you a lot more downside? And if you go from, 2100 to 1860, you're talking about a 250 handle move lower. That could be something in the cards for this year. On Twitter, I've talked many times about this macro pattern here, just to give you a bigger time frame, that if you reduce the cash, to be patient and wait. Okay, I put my wife's 401k in cash early in what's it called 2016, and I'm thinking I'm not going to think about putting it back until maybe a move into this area, okay? Because it's only January. You never know how long these can go. But again, look where we came from and look where we are now. We're just at this key support. So if this is what you call in technical analysis land, that head and shoulders top, which a lot of sectors already broke below, whether it was the bios, whether it was the banks, et cetera, whether it was the oils of 2 years ago. Anyway, here's where you're at. Okay, there's a point of reference, which I'm going to talk about again on a micro level to see if we could hold around 1820. And then I've also spoken about this 1770 level. And then obviously this would be, the double top that we broke out from. This would be, a pretty drastic area to come back and retest. But that would only take us back to about 2013 still. Okay, so anyway, let's go to the spiders because that's what a lot of you guys trade. And let's talk about today. No more macro. Let's talk about what to do today if you come in flat, which is the way I'm coming in today. It would be better to be short, but it's better than being caught. And thank goodness yesterday, it was so bearish, I don't think anyone really went out that long considering, another gap up sold. So here we are, within the spiders, okay? This is the flash crash low. This is 182.40, right? That was the level that we wrote down, 182.40, okay? We are opening below the Friday low, which is 185.52. The only longs that have been working during this entire sell-off has been in the hole, and then you've had to sell them pretty fast. And again, just like the S&P or the SPX, the 8-day has been controlling any bounce. Okay, so now the question is, can we hold this 182 area, okay, and come back up and bounce a bit, or maybe reclaim it with some kind of crazy red dog reversal with some force finally, or does it try and bounce, gets rejected here, and things get a little bit more, crazy and volatile below this area, which, your next spot really, like I said with the S&P, is probably somewhere around 177, 178. I wasn't expecting to see that so quick, but here we are, as a trader and a market participant, you can only be in the right stance, and you have to expect the unexpected, which at this point, what we have to keep our eyes open for. Oil has been a major problem. Oil, was up yesterday. Futures were up. It went down, gave clues to take risk off again, and it wasn't ready. Usually, if you break a number like 30, you at least see like something first 27-ish, and then 25-ish, and then you get some kind of bounce, and then below that, it's the same, law of round and whole numbers. The XLE has been a major problem. And just to show you rules-wise, I always like to show you. I hate to say coulda, woulda, shoulda, but again, look at this trend and look when it broke. And look how long it's been below the 200-day. You don't invest in sectors or stocks that are below the 200-day. And as momentum traders, you get out when it breaks the 8 and 21-day, and then you try and be sure to follow the trend down if you're good at that. But anyway, that was at 90. Okay, now here we are. Okay, look at the XLE. Trying to show, I guess, more of a macro level here. It's already somewhat below this spot from 2012. Yes, it broke below it right here. Okay, and now I think I guess you have a bigger spot down towards this 50 area. But all in all, on a short-term basis, what you should do today is probably write down every pivot low from last week. And if it stays below it, it's not worth your time. If it comes back above it, maybe you try a little bit. But really, the best way to do it is in the hole. Let it put a low in the first 30 minutes. Buy versus that. Comes to the point, add a little bit, and then sell it. That's the only really long trade that's been working. And again, so here's, this was the recent threshold that it broke, giving you your last clue to get out, and then it tried to bounce, and here we are again. So for the XLE, I'd write down 52.33, and this was that macro level way back closer to 50. The IWM has been relentless to the downside. I've tried to play a bounce here and there, and it just hasn't worked. Same kind of thing here, sector-wise. This loves to break ascending channels, which it did right here. And look what happened. This broke the 200-day there. That was your out. And this is when it broke the ascending channel and lost its last level. So lots of things you could have seen along the way. And now the question is, what do you do? So the low is 97.50. It's probably well below that now. If just say like the spiders get to 182 and bounce off it, maybe you buy the IWMs versus that low since it's so extended to the downside, but make sure to take trades, and if it happens to build, I think you'll see it. And it hasn't built yet. It's just been a trade, and then it's just been a better sell. You go to the macro chart of the IWM, and you'll see, you have to almost go back, I think, to 2010 now, to where potentially you could see a bigger support. But again, look at how it's below the 200-day and all the moving averages. During a healthy trend, you're above it, and you hold it. So at this point, it's broken a lot of levels already. And, where is the next one? I don't know. I guess you could say the next level here on a macro basis is a little bit closer to this 94.50 besides that pivot. And then we'll just have to keep measuring, because you never know, again, how deep do corrective cycles go. And at this point, we're in price discovery. And some people think that, this, is the from here to here is, the potential measured move, or maybe when it broke right around here. So you still have a ways to go. And it's the same thing for every sector. IBB's finally broke its 2015 lows, and it could see lower prices. So you look here at the chart. This trend from here was broken well before, and then you had another ascending channel broken here. And look what happened here, guys. The 200-day moving average. You break below, you get out, and you run for the hills. If you're not good at shorting, then you just get out of the way. And now, it broke below this recent support of 285, and I guess your next real level here, at some point, besides a trade here and there, is closer to 250. Okay, and if you want to go micro again, you look closer up, and this is your recent pivot that we'll see if it stays below or not. Here is now 273 to write down. Again, look how it's below all the moving averages, which is negative, which means be tactical, be short, or if you're long, be long, and love them and leave them real fast. You had a few opportunities in here, but nothing got sustained. Again, below. So, the bios aren't much help. No sectors are really giving you much help. The Qs have been playing downside catch-up. Let me go into them before we go into individual names. And, this too, we talked about when it broke the 200-day, get out of the way. And it broke the 200-day up here at 108, and now you could have saved yourself a hell of a lot of damage down to this area. So I'm sure it's below this pivot now, which is 99.51. You have a small point of reference here, which is probably below pre-market, which is 98.75. And then I'm not sure if we really hit this on the flash crash. It's safe to say that this might be your first spot to test, which is a little bit below 95. And the high beta tech names have all been just a two-way trade. There's been tiny little scalp longs here and there, but they all lost momentum in the end of last year also. Remember those two breakout failures in Amazon and Google, which showed distribution? Well, now Amazon, you go first here. This was your breakout failure. Okay, when it trades above a level and can't hold it, that means momentum is leaving. So that was one signal. And then when it broke its 50-day, the first time since here, that was your next signal, besides breaking the upper channel. And now here we are. So with that being said, it's probably below this spot, which is 565. I would say, this will probably be an area that it could test and hold the first time. So right down the 200-day closer to 530. If we see that today pretty fast, I'll probably be looking to buy this as just for a tradable bounce. Google's the same thing. It had a breakout failure, giving you some signals to sell it. Some people making good money short, some people just trying to play bounces in the hole, et cetera, et cetera. Here is the recent pivot support. Pivot support is 701, which we're below. You have one moving average here at 685, and then you have the 200-day there. Okay, so those are your levels here. What could you have seen in Google besides the breakout failure when it broke below this support and never was able to reclaim it, and it's been below home moving averages. So momentum leaves fast, guys. In the other momentum names, you already have Facebook, toying with the 200-day, and today if it loses it, that could see more downside. So be careful here. This already, remember we talked about this wedge pattern that triggered to the downside below all the moving averages there. Well, there was your gap. It tried to come back and never was able to. And this too has been controlled by the 8-day. So now you'll see what happens here. Does it hold this 92.45 or not? If it gets below the 200-day and stays below, I know Facebook has growth and it's a great company, et cetera, but again, look how far Facebook has come. And some trends are starting to break, and you go long term here, trend wise, it's coming close to a key spot besides this flash crash low. So we'll see what happens right there. I think you're going to get some clues from Netflix. Netflix was a pretty strong report. Last night in my recap, I said if it can't hold 116, 117, do not be long this, and maybe guys shorted it. And Netflix right now I think is like 112-ish. And if they take Netflix red and down after that kind of report, I don't think many are going to think any type of report is going to be good enough to find stocks that could be bought higher and stay higher. This was the trend line, and that's why I talked about this being very key right around here, right around this 116, 117. Can it get above and stay above to show some kind of signs of life for high beta or not? Well, now it's a little bit below, so watch Netflix in the first 30 to 60 minutes, whether they take it red, which will probably add a lot of pressure to the other high beta names, or do they hold up and the market finds some footing and rallies, then maybe this will show some leadership. But as of right now, no. IBM, it's been in a horrendous downtrend for multiple years, below the 200-day for I don't even know how long. So you can go all the way back and see the downtrend that this stock has been in, all lower highs and lower lows. All down to where it is right now. It's opening down 5. Some people ask me, to look at where longer-term support could be for IBM. And I guess you have a really big spot here, close to 120. Okay, so see how it acts at 120. Maybe, it's worth a look for a trade, but, it has so much friggin' work to do before it's anything more than that. As far as Apple, everyone's like, Red Dog, why aren't you so active in Apple anymore? I'm like, because, it broke. Apple broke its ascending channel, lost its 200-day around 115, and there was the head and shoulders pattern that I showed so many times. I was like, it should see at least 92. So besides small little trades, I've been pretty much staying away. I guess I would have been better to be short. But anyway, if you look at Apple, you'll see that, the pattern that I was all worried about was this head and shoulders top pattern. Okay, and here was your left shoulder, the head, the right shoulder. So this type of pattern, breaks here, gives you a measured move down to, the 80s. So, or lower. So I was thinking at least, let me, before I get any kind of aggressiveness with Apple, let me see if it could hold even the flash crash low, which comes down to 92. So as of right now, Apple is below this recent pivot. So for today, I'm going to see if we get a flash move down to the spiders of 182-ish, and we hold. Maybe there's a long trade here in Apple versus 92. But ultimately, it does feel as if, it could go lower. Some guys are talking low 80s. But at this point, here's your point of reference to trade around. This is that pivot. And if you got out of it, well, when it broke this ascending channel and lost the moving averages here, and now you can take a look. This pivot, it's just getting below, and I guess you could also write down 95.36. That is the recent low. Can't get back above that. Chances are this 8-day, look at the 8-day that's been controlling Apple also, could take it all the way down to lower prices. So once again, above the 8-day, above the 21-day, maybe you have swing longs. Below it, you're tactical, and and then if it's below the 200-day and then below the 8-day again, you're starting to get a downtrend where same way in 2013, 14, and 2012 you were buying it each time it touches there and continued higher. This guys are making money short it, and it's been a big adjustment. For me, I haven't made that much money short this year, but I haven't gotten hurt, trying to sit in things. I think this is going to be an opportunity. We're going to get some tradable spots, and hopefully you've adjusted, and hopefully in your bigger accounts you've adjusted too, as a lot of the technicals have pointed to this risk-off environment. Instead of holding your nose and going in the water, there are ways to get out of the way and then potentially get back involved at more compelling areas. And as far as the trade is concerned, there are guys out there that have been waiting to be, shorting rallies, using the H-cell setup, pressing through supports to get to lower prices, and those guys are probably doing very well. For me, I'm not that great at that. I'm trying to evolve a little bit into it, but again, at least I could see that the longs haven't been working, and stay out of the way until we get into those pockets where we can put on some bigger trades besides some just cash flow. And you never know where things go. So what you have to do is have a plan, have a process, have a system, trade within your means, have points in front of you, and keep moving forward with a positive attitude and clarity. Otherwise, you're not going to see anything you're looking for. And bad times do lead to good times, and corrective phases are healthy. They have to happen. So I know everyone's been a little spoiled and not used to it, but these type of situations cleanse markets, sectors, and set the table for better prices down the road for those who aren't caught. And hopefully, if you've been watching the morning call and a member of my note and the recaps, you're not caught and you're just waiting to find that spot. And it wasn't the recent one that looked like you could. There'll be others. And this is already long in the tooth. Have a good day today. Stick to the liquid ETFs and the leaders. Don't look at second, third, fourth tier names. No way. During market environments, just liquid ETFs and the leaders for clues. Nothing else. And lastly, I'm just going to leave you with the TLTs. Some guys have been just sitting in this, and look at the difference in the TLTs. Above every moving average. Broke above this, this pennant type pattern. This is the way long stocks used to look. Not right now. This is, this is the TLTs. So I have the inverse of it. So we'll see with the gap up. Your next resistance comes into 29. And if you're trading gold, gold's up a little bit. It's acted a little better yesterday. I pointed out how it's got somewhat of a wedge type formation here. And it's looking to break one way or another. And at this point, if it's going to be to the upside, I would say the GLD's got to hold this 105, and then maybe you could see the January highs of 106. And that's about it. I wish you luck today. Tune into the VTF. I'll try and tweet, but things are probably going to be moving fast, so I only have 2 thumbs and 2 hands and a keyboard and 6 monitors, and it might be tough. So, use the levels that I went over here. Print out the note that I do every day. It's a lot easier to have in front of you. And we'll just keep staying safe and looking for spots and moving forward. Have a great day.